Hi, I'm Jazz Tahalak. We're at CSIC Global in Riyadh. We're wrapping up day 4. Taking stock starts now.
Welcome to the show, and what a busy one it promises to be. Simply put, a remarkable reversal here on this trading Thursday here on Wall Street, because at one point earlier today, the S&P 500 had been up as much as 1.9%. Man, oh man, if you left your trading desk and didn't pay attention, you're probably in for a bit of a shock if you're tuning in to see the tail of the tape into the close. The S&P 500 now expected to finish down at session lows, down almost 1.6%. That tech reversal really responsible for a lot of the trading volume here in the afternoon. Earlier this morning, things seemed all good. A lot of optimism among investors from Jensen Huang and NVIDIA's forward-looking forecast, perhaps enough to assuage the concerns of investors over the durability of the AI trade. Those concerns came back in no uncertain terms. Tech giveth, tech taketh away. Tech now leading losses down to the downside. As tech goes, so too go the broader markets. And man, oh man, what a stunning reversal. I've been doing this a long time. Very infrequently have I seen a market reversal, the likes of which we have today. That all sets the stage for today's closing bell and today's show. And welcome to it, one and all. You're watching Taking Stock. I'm JD Durkin. Moments away from the ringing of the iconic closing bell here at the New York Stock Exchange. The team from Emerson here now to do the honors. Don't go anywhere. A jam-packed, crucial day to bring you the latest for the tail of the tape. But for now, the team from Emerson, ticker symbol EMR, here at the NYSE, set to bring about a close to today's financial markets. There you have it. Finally bringing about a close to today's trading action. The tail of the tape, the S&P 500 down 1.5%. The Dow Jones down 0.8. The New York Stock Exchange Composite Index down 1.2. And the small caps, as is often the case for these more defensive days, down 1.8%. Worth noting, earlier in the day, volatility catching a bid with the VIX peaking all the way back up to 28. That was its highest level since October 17th. Oil benchmarks in retreat for the day, and the crypto majors getting absolutely clobbered on the session, with Bitcoin falling as low as 85,912, its lowest level since April 12th. Let's bring in Kai Wu. He is the founder and CIO at Sparkline Capital to get his perspective on today's price action. Man, oh man, I always like to say drinking from a fire hose on busy news days. This was a wild set of trading hours for Wall Street. What did you see across the major market indexes today?
Yeah, I mean, it was a roller coaster ride for sure. You mentioned the headline stats, crypto markets down, S&P down. I mean, I think the biggest news was, of course, NVIDIA, right? So all eyes were in NVIDIA last night, the Super Bowl of Wall Street. Jensen gets out there, makes his announcement, great quarter. $57 billion of quarterly revenues, 62% year-on-year increase. Huge quarter. The market's excited, AI stocks rip. This morning, everything looks great, right? It looks like we're back, AI trade's back on, market's up 5%, NVIDIA's up 5%, all the stocks are up. And then over the course of the session, things unravel. So here we are today, as you mentioned, the market's down 1.5, NVIDIA's now down over 3 percentage points, right? So this is kind of a crazy situation where, they do pretty much the best possible thing they can do, completely good execution this quarter, yet prices are down. What happened? Why?
Yeah, exactly. Give me your perspective. I mean, we talk about the S&P 500 being so heavily consolidated behind these names like NVIDIA, like Microsoft, like Meta, which is great when those names are ripping to the upside, because maybe at the expense of the S&P equal weight, the broader markets go with them. But man, oh man, we get a sharp reminder of the heavy consolidated. What more will you be looking for between now and the end of the year out of those mega cap names?
Yeah, look, I think you're highlighting an important problem. A third of the S&P, 40% of the NASDAQ are concentrated in the Mag 7 stocks, NVIDIA, the hyperscalers who are their biggest customers, Tesla, so on and so forth, right? So that creates a lot of concentration behind a single trade. Is AI on or off? And it was an interesting earnings announcement yesterday, because while in many ways the entire market was paying attention to it, in some ways it wasn't really news, because we already saw the NVIDIA's biggest customers, Google, Microsoft, and Meta and Amazon report, and in their announcements they talked about their CapEx spending plans, $400 billion in annualized spend expected to ramp up into the future. And all NVIDIA did yesterday was just confirm check that box. Yes, indeed, that is true. Now, the big question moving forward is this AI capex sustainable? Right. What we've seen in prior investment booms is technologies like the internet or the railroad have been transformative for society and for the economy writ large. Yet, there has been a pattern of overbuilding where this dynamic builds where if you're Larry Page, you say, hey, I'd rather go bankrupt than lose this AI race.
Sure.
These companies want to win and they view AI as existential. And as a result, they pour money into this. Now the question is, that's all great for NVIDIA, for the time being at least, but if in 2-3 years the revenues don't materialize, what happens? We have excess capacity, stranded supply, the dark fiber problem of the dot-com boom, and that's not good for the folks spending, the telcos of the dot-com booms, or the hyperscalers today, nor is it good for NVIDIA and for Cisco, right? Cisco was the NVIDIA of the dot-com boom, selling the equipment to these firms. That stock was down 75% in the bust.
I got about 30 seconds left. We talked correlation between how a lot of these big name mega cap equities trade and what's going on for the crypto market more broadly. What are you following out of the crypto majors for what's usually a very strong part of the year for them?
Yeah, I mean, it's been somewhat surprising, to be honest, especially the decoupling of gold and any of the other macro assets from Bitcoin and the crypto majors. As you mentioned, Bitcoin has fallen precipitously, down 30%, let's say, from its highs just a couple of months ago. Wow. I think a big factor has been the October 10th event, that we were talking about off camera, a major liquidation event in crypto markets. We saw, Bitcoin down 15% in a couple hours. Some of the altcoins down 50 to 80% in a few hours. Some assets were trading on 99%.
Wow.
Right, and so it was just a complete bloodbath for crypto markets and for the market makers who had to step out. The exchanges, many of whom had to trigger their automatic leveraging protocols.
Of course.
And market participants are, quite frankly, still shell-shocked.
Yeah, leverage can really work to your advantage on the upside, but during these big pullbacks, you're reminded of what the other side of that coin here as well. Kai Wu is founder and CIO at Sparkline Capital, helping us kick off the broadcast. Outstanding opening broadcast guest. Thanks for being here.
Thank you.
Good to have you here. Jeremy's going to grab your mic. Howie, you and I are going to head for a walk. Man, oh man, what a day. We are going to bring you the latest now event contract odds from our friends over at Polymarket, as Polymarket participants are trying to answer the question, who will President Donald Trump nominate to be the next chairman of the central bank? Jay Powell's term, of course, comes to a close in May. Up on Polymarket right now, 45% odds that the pick will be Kevin Hassett, currently works for the White House. 21% chance it is Fed Governor Christopher Waller. 14% chance it is Kevin Warsh, former Fed governor. 12% chance it is BlackRock's Rick Ryder. That particular event contract, more than $7.5 million in total trade volume. Howie, while we have a few moments, we'll take a look at two NYSE notables. One big notable on the day, one of the strongest performing names in the S&P 500 today, the team from Walmart, knocking the cover off the ball for earnings and forward-looking guidance, up more than 6%. E-commerce sales up 27% around the world. The company saying more six-figure income earners are doing their essential shopping at Walmart than ever before. The stock is now only 3% off of its all-time high. Finally, let's take a look at shares of XLK. This is the technology ETF from Select Sector Spiders. Technology shares, as we were talking about there with Kai a moment ago, down 3% here on the day, was up as much as 2.8% after the open. The biggest drawdown we've seen in shares of XLK since Friday, October 10th. Out of the 10 most weighted names in this particular tech ETF, IBM, the only name in positive territory today. Shares of XLK still up 18% from the start of 2025. Earlier today, FinTech TV's very own Remy Blair caught up with Prashant Sharma of Dagasta Properties at the Cityscape Global Conference in Riyadh, Saudi Arabia. We now bring you that interview. Take a look.
Dagasta Properties is a Dubai-based real estate developer that focuses on high-quality residential properties. This does include a mix of affordable housing as well as luxury developments. The company is attending Cityscape Global 2025, and joining me now is Prashant Sharma, Head of International Business for Dagasta Properties. Prashant, thank you so much for joining us today. So first and foremost, give us an overview of Dagasta Properties.
Well, thank you first of all for having me. About us, we're a real estate developer based up in Dubai. The USP of our product is we're bringing out in the market not just an architectural product, but it's a financial product as well that maximizes your cash flow. So basically, what when you're investing in a property, you're getting maximum rental return. Any investor from overseas, anybody investing from North America, Europe, any part of the world, can freely and safely invest. At the same time, will get a good cash flow out of that investment. To your surprise, we're giving 10% rental returns on your property for 10 years. This is why we call this product as 10 on 10. And at the same time, North America, we have a lot of maintenance fee for the condominiums. So for our residential property, in Dubai, we call it as service charges. So we're waiving off the service charges for 10 years. So basically 10% return for 10 years and no service charges, which means you don't have to pay any maintenance fee. You pay nothing for your property management fee because we've created a sell to manage model. When we entered in the market, we started off as a property management company and we've got about 35 years worth of an experience. And then we got into development in 2016. So we have a full-fledged sell to manage model. We're not only selling your property, but also managing it for you. So kind of a one-stop shop. You don't have to go anywhere. So pretty much whatever you have it under one roof as a peace of mind product. You invest with us and we're managing your unit as well. So, and also on top of that, we're giving you 10% return. Dubai market is booming. Our properties are located in strategic locations where near Al Maktoum Airport, and I'm sure, needless to say, the world knows Al Maktoum Airport soon to be the world's largest airport. We've got a lot of properties over there. We've got properties all along the East End as well, closer to the academic city in Warsan 4, JDC. A lot of properties over there where infrastructure development is happening. When I say that, it means Etihad rail network is moving from north along the east towards the south. And our properties are strategically located over there, which is about, 3 to 4 minutes of distance, 5 minutes distance from the future metro station. And as we all know, infrastructure development drives capital appreciation. So you have that as an investor added advantage that not only you're getting a 10% return on your property, but also your property is appreciating. The relative index will increase in comparison to any saturated areas when you are investing. Thank you.
So, Prashant, based on what you just said, can you take us through the direction of the brand for the next year, as well as insights into future plans?
Sorry, could you say that again?
Yes, if you could share the direction for the brand and also the next year alongside future plans for the company.
So the future plan for the company is to expand further. We're expanding our horizon. We've opened multiple locations where we have an office in India, we have an office in Singapore, and we're recently opened an office in New Cairo in Egypt. And we plan to expand our, territories, have an extended arm here in Saudi. Saudi market has accepted us with the open arms, and Saudi Arabia market being our number 3 top investor when it comes to investing with regards to property. So definitely plan for the next year. We would wish to, have our dedicated office, and we've confirmed our participation for Cityscape Global 2026. So we are coming back here. So anybody traveling from the US or other parts of the world who wish to see us back and have confirmed, you can see us again in 2016. We're going to be here in Cityscape. But meanwhile, we're here in Dubai. Wherever you are, whenever you wish to contact us, you can.
Okay, Prashant, well, thank you so much for joining us from Cityscape Global 2025. We appreciate your time, and thank you so much for sharing all of your insights.
Thank you so much for having me. Sincerely appreciate it. Thanks.
Welcome back to the broadcast, one and all. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for the latest headlines you need to know in the worlds of fintech, crypto, and artificial intelligence. First up, as we mentioned at the top of the show during closing bell, man, oh man, the crypto majors, Bitcoin, Ethereum, Solana, continuing their slide today as the ongoing crypto bear market intensified during the day. This follows this previous Tuesday, in which BlackRock's iShares Bitcoin Trust saw a record of more than $520 million in one-day outflows as Bitcoin fell at the time below 90,000. All the while, more than 65 crypto organizations are urging the White House to direct federal agencies to speed up tax and regulatory guidance, including a tax threshold and developer protections. That's what you need to know in the world of fintech, crypto, and AI. Let's now bring in our special guests, folks. Say hello to Ted Hansen and Shiv Iyer. They are CEO and president, respectively, of ASGN. Gentlemen, welcome to the New York Stock Exchange, and welcome to the show. It's great to have both of you.
Thanks, JD. We appreciate being here. Looking forward to the conversation.
Of course, Ted, let me kick things off with you first and foremost. What brings you and your team here to the NYSE today?
So we're here today to do our 2025 Investor Day. It's been 4 years since we got our investors together to really talk about the transformation of our business from an IT staffing to a strategic technology provider of solutions, especially foundational solutions that relate to the readiness for AI.
Shiv, as president, what did Investor Day look like for you, and any big announcements that you had for your investors here at the exchange?
Investor Day went great. We had a lot of our investors and analysts, and it was great to be able to stand up there and talk about our story and how we're evolving and transforming as an organization. There was a big announcement when we talked about the unification of all of our brands as the ASGN organization under a new brand. More to come around that, but that was the big news.
That's amazing. Well, congratulations to you and the firm, of course. Shiv there mentioned a moment ago, evolution, things ever changing. We operate in a world of financial markets where you can't wait very long before new technologies are changing the conversation. What does that evolution look like for your company, Ted?
Well, look, I think it's about being ready to serve the needs of the customer, especially in the world of AI. So we have a enterprise customer base, both in the commercial market and the federal market, large enterprise, Fortune 500 and 1,000 customers needing all kinds of solutions, especially getting ready for AI. So it's really about preparing ourselves to serve them in the future.
Shiv, what does artificial intelligence adoption look like for the company in an age where all of our viewers are seeing and reading AI-related headlines seemingly by the minute?
Look, I think as with every other company, we are out there testing AI and agents in our environment, and we're seeing some success. Broadly speaking, I still think companies have work to do in scale AI enterprise-wide, whether it's because their data isn't ready or their tech stacks aren't ready or they don't really have the talent to adopt AI. So I think that's where we are, and that's the environment in which we're shaping what we do so we can get them ready for adoption of AI at scale.
I love a good conversation about tech stacks. I also love a good conversation about exciting partnerships. What did you just recently announce with the team from Salesforce, Ted?
Yeah, so we announced a new 360 relationship with Salesforce, and Salesforce basically coming to us and saying, look, we've got these great agentic AI capabilities within our product, but we need your help in engineering those and bringing those down into customer environments. So it's a way for them to begin to scale their competencies, if you will, within agentic AI, and we're best positioned to deliver that to the customer because we've been with them for years and decades and understand their IT environments.
I've got less than a minute left, but before I let you go, talk to me about how you're approaching the general merger and acquisition space, and specifically anything on your horizon you're most looking forward to for the firm for 2026.
Yeah, well look, M&A's been an important part of the company. It's how we position for future growth. Most solutions we can position for organically, but there are some solutions that we need today to be at scale with strong technology partnerships, accretive to growth and margins and earnings and all the rest of it. So it's an important part of the strategy, and it takes both organic growth and strategic M&A.
Ted Hansen and Shiv Iyer, CEO and president, respectively, of ASGN, join us not only at the New York Stock Exchange, but live on Taking Stock. Gentlemen, thank you to you both for being here. Congratulations on a great Investor Day. We'll do it again soon. Come back anytime.
Thank you.
Folks, don't go anywhere. Much more Taking Stock live from the NYSE is coming up after this. Welcome back to the broadcast, folks. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Say hello to the team that just rang the closing bell from Emerson. We got Mike Bachman, CFO, and Ram Krishnan, the COO of Emerson. Gentlemen, welcome to the exchange. Welcome to the show. Great to have both of you guys.
Thank you, JD. It's great to be here.
Absolutely. Ram, can I kick things off with you? What was the experience like for you and the team to be down here at the New York Stock Exchange ringing the bell today?
Well, a lot of energy. We were here 3 years ago and we announced the transformation of the company, and to come back here and have the meeting today and then get together with the team to ring the bell, lots of energy, lots of excitement, and we were pumped.
Mike, your colleague here was just mentioning the meeting. Talk to me about Investor Day. What did it look like, and how do you and the team prepare to have such a big event here at the Exchange?
Wow, the Investor Day takes a ton of work, JD, as you can imagine, to get ready. It's an important day for us. We had a great day here at the Exchange. We presented our story. I think people like the story, and we just had a great day.
Ram, for anyone who's watching who might be a bit unfamiliar for Emerson, give us more of an introduction, and really what would you say are among your top priorities right now here in Q4?
Yeah, I think Emerson is a global automation company. We have a complete technology stack to automate mission critical industries like power plants, refineries, oil and gas platforms, life sciences. And for us today, it was all about how we've changed the company to be an automation leader that can grow at 4 to 7 through the cycle. We've upped the growth profile of the company. We talked a lot about innovation and commercial excellence fueling that. We talked about our operational excellence cadence to drive world-class margins, and then a shareholder-friendly capital allocation framework in this plan, which was important for investors to hear.
So let me ask you then a little bit more about that framework. What has it looked like overall, a little bit under the hood of the financials of the success the company has had so far here in 2025?
Yeah, we talked about 5 important numbers: $21 billion of revenues by 2028, 30% adjusted segment EBITDA, $8 of adjusted earnings per share, $12 billion of cumulative cash flow over that period, and a 20% free cash flow margin. And we're, as Ram said, we've repositioned the portfolio and the transformation to drive those kind of financial results. And we're also talked about $10 billion return to shareholders in the form of dividends. We've increased the dividend 5% this year, and we're counting on dividend increases in the future and $6 billion of share repurchase over that time. So we feel like we're in great shape financially, and really pleased with where we are.
And Ram, speaking of the future, not to get too in the weeds of like forecasts and guidance and wonky Wall Street talk, but give me some perspective about the things you're most excited about on the horizon for Emerson as we soon enough turn the page to 2026.
Yeah, I think the innovation underway across the company. I think that's really what is most exciting. It's exciting for shareholders because that innovation is going to translate into the outsized performance and deliver on the numbers Mike talked about. But most importantly for our customers, we're stewarding the industry towards autonomous operations, both in production and test. And we laid out a story on all the innovation underway in the company, customer-centric innovation that's going to move the needle for our industry and our customers, and that's what we're most excited about.
Ram Krishnan, COO, Mike Bachman, CFO of Emerson. Gentlemen, thank you both for being here.
Thank you.
Congratulations on a great Investor Day, and thanks for joining us here on the show as well. It's great to have you. Folks, don't go anywhere. After a quick break, the latest from Money 2020's Chief Strategy Officer, Scarlett Sieber, and so much more of Taking Stock you do not want to miss. Don't go anywhere.
Welcome back. It's Scarlett Sieber from Money 2020, and this is Hindsight 2020, where we look back at the financial moments that changed everything. Today we're going to be rewinding to the second week of November 2008. While the US was busy panic patching Wall Street, China was busy writing checks, very big ones. All right, settle in. It's November 2008. I was actually living in China at the time. Lehman had already cratered. AIG was getting triaged like the financial ER patient that it was at the time. Citigroup, moments from collapse. The West was in full freakout mode, much like my toddler after picking him up from daycare. And then China stepped in like, hold my wand. They dropped 4 trillion won stimulus package, roughly 586 billion USD, the biggest in Chinese history. No hesitation, no committee delays, just boom, here we go. I wish I had won, but I only got dollars out here. That's all right. Why? Because China saw the writing on the wall. Their export-driven economy was about to take a global buyer strike. So they pivoted, and they did that hard. Instead of bailing out banks like the West, China went full-on infrastructure beast mode. Railways, housing, airports, electricity grids. It was like if instead of rescuing Bear Stearns, the US built 200 new Hoover dams. Bold, concrete, literally. The strategy. China knew 2 things. The world wasn't going to buy their stuff for a while, and domestic growth had to take the wheel. So they didn't just wait for the dust to settle, they kicked it up. The impact? The stimulus didn't just help China avoid recession, it laid the foundation for their high-speed rail empire, a decade-long commodity supercycle, and a whole new era of economic self-reliance. Hello iron ore, hello Aussie mining stocks, hello global power shift. While the West was duct taping the financial system back together, China was laying track, literally and figuratively. They didn't react, they acted. And that's your glimpse into financial history for the week. See you next time when we look back again with perfect clarity. Back over to you.
Welcome back to the show. We'll get you quickly caught up on the way the major market indexes performed on this major reversal here on this Thursday. The S&P 500, final tail of the tape, down 1.5%. The Dow 30 components down 0.8%, and the small caps bearing the worst of the defensive risk-off trade for investors, down 1.8%. Bitcoin currently in retreat over 4.5%, currently sitting at 87,282. All 7 of the mega cap, also known as the Magnificent 7 stocks, all down in negative territory. That's going to do it for today's show. Tomorrow morning, 9 a.m., NYSE TV Live and FinTech TV Live, count you down to the open, and we will see you tomorrow.